another credit. So I'm going to copy that. Going to put our cursor in C18, right click, paste it 1, 2, 3. All right, now we're going to post this out. I'm going to make this small again. I'm going to make it small back down to 70% or so. Scroll over so we can see the GL. We're going to post the landscaping supply. So here it is here. Here it is on the trial balance, third account. On the general ledger then, third account. We see it in X23, where I tried to post that last one too, but this is what should really go there. So we're going to say equals the 185 and enter. So that goes up to 185. We're at 185 here. We're out of balance by 185. Why? Because the debits minus the credits are out of balance by 185. Accounts payable, next account, that's going to be our first orange account on the trial balance. That means it's going to be a first orange account on the GL. We are in the credit side again. This equals, we're going to point to that 185 here. That will make the credit balance go up in the credit direction. So remember that, think of that as going up, right? It went from 1.5 to 1.685. We see that here on the trial balance. We also see it here. Now remember, we hit the payable account now, so we see who we owe here. So if we look at the trial balance, we owe people 1,685. Okay, let's write a check. But who do we write it to? Well, we can look at the account's general ledger, but that just tells us by date. We also need this information by vendor, and we call that the accounts payable subsidiary ledger. We bought this from A company, so we're going to go to A company. I'm going to say equals, and just put the same information, that 185, down here. It just needs to be down here somewhere, but by vendor rather than by order end date. Then we have our total from all our vendors adding up. Why is there a vendor down here? Of 1,685, and we see the 1,685 and the 1,685. All right, so let's make this larger again. We're going to go back up to 100%. We're going to go back over to our information. We are now on 7.8, and we paid cash for gas and oil. All right, that's a standard transaction. So is cash affected? Yeah, we pay cash. So cash has a debit balance. We need to make it go down. We're going to do the opposite thing to it, which would be a credit. So I'm going to copy that. I'm going to put the credit on the bottom because credits traditionally go on the bottom. So we are in cell C21. Right click and paste 1, 2, 3. We're going to go on the credit side. Going to represent the credit with a negative number. We paid $80. $80. And enter. It formats as a credit. If we have a credit, we need to debit something as well. So I'm going to put our cursor in D20 and debit the same $80, but a positive debit in this case. And then what are we going to put the debit to? And we paid for gas and oil. That sounds like an expense down here. So if we look at our expenses, they're all down here. And I'm just going to call it, in this case, auto expense. So we're going to put it into auto expense. And you might be saying, well, I saw auto something before, and it was up here on the asset side. Why did we have an auto asset up here and an auto expense down here? And the reasoning behind that is that we bought a truck up here, and we put it into the asset because we're going to allocate the cost over the useful life. The expense of oil and gas, we're assuming we already used, and or it's smaller and less material, and therefore we're going to expense it when we purchased it because we've already consumed it under the matching principle. And we'll note that we already know that we're going to debit it because we credited cash, but we'll also note that all expenses only go up for the most part, and that all expenses have debit balances. Therefore, we're pretty much always going to debit the expense, because to make something go up, we do the same thing to it. All expenses have debit balances, therefore to make them go up, we have to debit them. So we're going to debit the expense. We're pretty much always going to debit expenses. So I'm going to right click in C20 and paste it 1, 2, 3. There's our transaction. Let's post it now. I'm going to make the taskbar go back down to 70 down here so we can see more of our activity. Here's the expense. The expense is way down here in the blue section, so it's going to be way in the end. So the expense is our second darker blue account. So I'm going to go over here. I'm going to left click a few more times till we see the auto expense. It's way over here in AN26. I'm going to post it this way this time. I'm going to select an equals. And instead of using the mouse, I'm going to hit the left arrow. And note what is happening here. I'm just selecting the the left arrow, and the cell is changing. It's going to keep changing until I hit enter. So I'm going to just go, okay, hold it down until I hit the wall. And I want to post that $80 debit. And then when we select enter, it'll post that out. And if we go on that cell, we'll see that it's got equals D20, so what's referencing to, and the 80 is going to make this go up, and we're okay there. So now let's post the second side. Of course, we're out of balance by the $80. The second side is a nice easy one, cash, which we can see right here. It's cash. And it's going to be on the credit side. So we're in U12 equals, I'm going to point to that $80 credit. And then when you select enter, it's going to make this go down. And that'll put us back in balance. We have an effect on net income now. Net income's affected. Why? Because net income is the revenue minus the expenses. This is actually a loss, even though it's a positive number. Reason being, because revenue will be represented with credits and debits expenses. So we actually want revenue to win over the expenses, and they're not right now because we don't have any revenue yet. So we have a loss of $80 at this point. All right, let's make this large again. Go to the next transaction, back up to 100. And we are now on, once again, 7-8 again, I would think. 7-8 again. And we purchased advertising on account from B company to be paid in the future. We purchased advertising. All right, so is cash affected? No, we purchased it to be paid in the future. All right, so the other account that we're going to pay, when that happens, the IOU account is accounts payable. And once again, that's the account we know that's going to be affected, but we might not know which way it's going to go. Is it going to be a debit or credit? We could think that through. Sometimes it's easier to think about what we got. In this case, we got advertising. So advertising, if we used it right away, it would be an expense possibly. We can see down here we have advertising expenses. And so if we think about the advertising expense, here's that account. Here's all the expenses. They all have debit balances. Expenses only go up, meaning the advertiser is not going to pay us. We're always going to pay the advertiser. And so how do we make something go up? We do the same thing to it, which in this case would be another debit. So I'm going to copy the expense. I'm going to put that on top and say we're going to have to debit the expense. We know that's what we got, and we know we're going to debit it. And that's going to be for the amount of $315. So we're going to credit something for the same amount, negative $315. And what's the credit going to go to? Well, we didn't pay cash, so instead of the asset going down, the liability is going to go up. Liability has a credit balance. If we credit it again, we're doing the same thing to it, which will make it go up, which makes sense because we owe more money. So I'm going to copy that. I'm going to put our cursor in C24, right click, paste it, 1, 2, 3. All right, here's our journal entry. We're going to post that. I'm going to make this smaller again, go back down on our taskbar to 70%. Then we're going to post the advertising. So here's the advertising. It's way down here in the blue area. So it's going to be way over here on the end again. So I'm going to put our cursor here. I'm going to use my arrows to go on this side and find advertising. It's way over on AR9. We want to be on the debit side. I'm going to select equals and then use the arrows again. I think the fastest way to do it is really just hit the left arrow till you hit the wall and then go down to advertising. So at the end of the day, if you're in the same cell I'm in, it should be equal D23. So if you select enter, then we'll have in cell AR9, we'll have D23 in there, bringing the balance up by 315. Now we're going to record the second half of that, which is going to go to accounts payable. So here's accounts payable, here's accounts payable here, first orange account, here's accounts payable here in AG11. So we're going to select equals, point to that 315. That will make this go up because a credit and a credit are the same thing, goes up in the credit direction to 2,000. We see that 2,000 here, we see it here. Now again, if we look at the trial balance, we say, we owe people 2,000. Let's write a check for that. Well, who do we write the check for? Well, let's look at the GL. Well, that just gives us the detail by date. We're also going to need the detail by vendor, and we call that the subsidiary ledger down here. So we need the AP subsidiary ledger, and we got to see who did we buy this stuff from. And I'm going to look back over here because I can't remember. B company, a very original name. So we're going to go down here to B company. Notice we're out of balance by the red there. We're going to select in AC47 equals, and I'm just going to post this same information, 315. So now if we add up all our vendors, we owe this 1.5, 185, 315, adds up to 2,000. That's what we owe here in the trial, in the general ledger, and that's the same on the trial balance. All right, so we're going to make this large again. Let's see what else we have here. We have on 7-9. Received cash for work that will be done in the future. Okay, so first question, is cash affected? Yeah, we received cash. So cash is affected. Cash has a debit balance. We're going to make it go up because we got more of it. How do we make something go up? We do the same thing to it, which in this case would be another debit. So I'm going to copy that, scroll down here. I'm in C26. I'm going to right click and I'm going to paste that 123 on the debit side. The amount that we got in this case is 360. And we're going to debit something for the same amount, a negative 360. All right, so then we just need to know what we're going to credit. And this one's a little tricky one kind of to start off us with, because you would think that if we did work, we would credit cash. But they're saying that we did not do the work yet. We're going to do it in the future. So we got prepaid. They paid us for work that we're going to do in the future. And under the revenue recognition principle, we can't recognize the work until we do it. So we got money, so we debit cash, but we can't credit revenue yet like we want to until we complete the job. So therefore, we're going to put it into this account called unearned revenue. It's a liability. Why is it a liability? Because we owe stuff in the future. What do we owe in the future? Not the cash necessarily, but our services, our work. If we don't do the work, we probably do owe the cash in the future. Therefore, we have a liability. Liability has a credit balance. We're going to make it go up by doing the same thing to it, which in this case would be another credit because we owe service in the future. So I'm going to right click, paste it 1, 2, 3. Here's our journal entry. Let's post it. I'm going to take the taskbar down, back down to 70 like so. We're going to post it cash first. So cash is the first account on the trial balance, and therefore it's the first account on the GL. We can see it right here. We're going to debit cash in this case. We got some more money. That's nice. And so I'm in T13 equals. We're going to point to that 360, making the cash go up. Puts us out of balance down here. Now we're going to post the unearned revenue. So we're going to go over here so we can see the liability accounts. Unearned revenue, that's our last orange account because it's a liability. Here's our orange accounts over here. We're going to be in the credit side. So I'm in AK9, AK9, otherwise known as unearned revenue, first selected transaction area, and equals, and we're going to point to that 360, making this account go up by 360. We see the 360 here. We see us back in balance there. Net income now has a loss of 395. All right,